Hello, everybody. Glad to be back. Ryan here. Hope you guys have been doing well. And I know that a bunch of you have finally got invested in Bitcoin, which I'm super excited because I know most of you have seen the monster push in price of Bitcoin in the last week. I know my little brother and I, as we were traveling Peru, we saw every time we would get back to like civilization, we would have service and we'd always check our Blockfolio account and we would see Bitcoin was just taking off. Like it was insane. We'd come back a few hours later and it'd be up $300-400 in just a few hours, which is absolutely insane. But welcome. I'm happy to be back from Peru so that we can talk about some cryptocurrencies and another topic, risk management. And the reason I want to talk about these, I just want to help you guys better understand how to control your risk in a speculative investment like cryptocurrencies. Because some of you, and then a lot of people I know that are not invested in cryptocurrencies and don't really understand them, might be seeing some of the returns we have made in our streets portfolio and would say we're gambling. But that could not be further from the truth because we're using a couple techniques that mitigate our risk, and by us investing early into an investment that we know hedge funds are getting into, is that gambling or is that smart? So that's kind of up to you. But so the first technique we're using right now to kind of mitigate our risk is called asymmetric risk investing. And you might have seen me, I think I briefly mentioned it inside the course area. And it basically means you take a trivial sum of money and potentially turn that into life-changing wealth. It's the old question of, is it better to risk 100% of your money for the prospect of a few percent gain, or risk 1 to 5% of your money for 100% gain, 200% gain, even 1,000% gain, as you've seen in some of our portfolio positions? And crypto investing definitely falls in this latter category where we're risking a little bit to make a lot. Unlike if you were investing in the stock market right now, say you have $1,000 in the stock market, you have all the downside to the bottom. Like your $1,000 invested could potentially go down to zero, so you have $1,000 risk. But in cryptocurrencies, like I've said, we're only risking 1 to 5% of our portfolio, which is really small. And pretty much the only time you could really use this strategy is when you're early in a space, like we are here in cryptocurrencies, because we are obviously ahead of many of the hedge funds that are coming to invest. So we are basically early angel investors in this new technology, the blockchain, and then cryptocurrencies. So yeah, that's one way we're mitigating risk, is with asymmetric risk investing, just investing a little bit of money to potentially make a lot of money. So I want to remind you guys, make sure we're keeping our position sizes small, and that's why I tell you guys to kind of spread your investments around into the positions we might have in our portfolio, with the main two, of course, are Bitcoin and Ethereum. And then another way we're mitigating risk, as you can see, I'll bring you over to my spreadsheet. You've been looking at it, but talking about being an Indian giver. An Indian giver is somebody who gives something and then takes it back. And in this example, we're investing something and we want to see how fast we could get that money back. So we're going to have our initial investment and we want to get that initial investment back. So here you could see, let me go to here's my Coinbase account. You see my actual one. And just recently, I've sold off of some of my portfolio in Bitcoin. This was November 6th. I'm at right now at November 7th, the morning of I'm recording this. But so last night I sold off a pretty sizable amount of Bitcoin because I want to be an Indian giver. I want to get my initial investment money back into my pocket as fast as possible. By doing that, I take my risk down to zero while still having money in the market, basically house money that is out there to make me more money down the road. And I could take this money now and invest it in other areas. And for me, my end game for everything is in real estate. So I'm taking this money that I made, or my initial investment that I've made, back, and this is going to go into my real estate fund that I'm building up to buy me a bigger apartment building. But the cool thing is I still have all, after I took all this out, so you can see again, took out roughly, not roughly, exactly. Oh yeah, so here is my total investment in Bitcoin, and 3,000, about 500, 2,500, and so on. So I invested about $6,303 in Bitcoin. And so at that time, my risk, this is 100% of my risk. So when my money was in the market, my total risk was $6,303. So say Bitcoin crashed, I could have lost my whole investment. But now, since I withdrew all this money, you see, I sold off all these positions, and right now I have it sitting in my US wallet until I withdraw that. And so that's $6,256. So let's put this 6,256. So now my risk went from $6,303 to $47, and that's a trivial amount, so I'm not too worried about that. But so this money I'm withdrawing, that's going back into my account, and I still have the rest of my Bitcoin. I have still 1.2 Bitcoin, and I still own Ethereum, and I still own all the other little cryptocurrencies. But now my risk for Bitcoin is 0. And I've already done this for other positions I have in Ethereum and Monero, where I've basically took profits off the top, took my initial investment, and took my risk down to 0. And this is something I want you guys to be thinking about as you're investing. I don't want anybody to get greedy. Of course, I would like all of us to become millionaires doing this, but we want to be smart. And at the streets, we recommend being conservative with all of our investments. And by one, asymmetric risk investing, you can see this is asymmetric. Right here, that's just by us investing a few percentage points and doing what I just did right now. I took all my risk down to 0 by taking out the initial profit. And of course, say Bitcoin continues climbing up, I won't make as much money, but I'm still making money without the risk. And that's my goal, is not to have risk in anything. Number one goal is, Warren Buffett says, rule number one, this is in terms of investing, is to never lose money. And rule number two is to never forget rule number one. And by taking out my investment, it's impossible for me to lose money. So I'm following one of the world's greatest investors' strategy just by taking out all that risk. So I hope that helps you guys out understanding risk a little better. I know it kind of dragged on this video. It's kind of all over the place, but I hope that helps you out, and I hope you guys continue learning more about Bitcoin and investing, and let's keep making money. All right, take care, everybody.